Domino's launches 20-minute delivery in 14 cities across India. The stock of Jubilant Food surges about 2% in trade today.
Dixon Technology subsidiary Apache Electronics receives over 50 crore rupees in incentives under the PLI scheme. The stock trades higher with the management tells CNBC-TV18 that it's lowering the mobile business revenue guidance as sales are slowing down a little bit.
Shyam Metallics completes the acquisition of Motocorp, adding 1.5 lakh tons of stainless steel capacity. It also announces capex plans of 10,000 crore rupees over the next 5 years.
City Union Bank reports a gross NPA divergence of 259 crore rupees for FY22, amounting to about 20% of slippages. Analysts also say the bank could miss its loan guidance that they've given earlier. The stock corrects 5%.
COVID fears resurface as cases spike in China and the United States. Health Minister Mansukh Mandavia is also set to hold a review meeting today. Stocks of diagnostic companies surge in anticipation of higher testing. Good morning, you're tuned into Chartbusters. You're on CNBC-TV18. I'm Sonal Bhutra, and with me is Nigel D'Souza, who is in a very happy mood ahead of holidays, right? You were singing. It's the best time of the year in the break, and markets are not taking cue from that. The mid-cap index, though, that's the one which is outperforming with gains of 0.3%. But markets just at the day's low right now, so a 33-point downtick on the Nifty. The mid-cap index too has come off from the highs. But we'll have to see which way things go. Yesterday as well, it was a down day for our own markets. Global factors really affecting our own markets as well. But Nigel, what are your plans?
Well, so I'm going to get through today, and then I'm off to the pavilion till the end of the year. And it's been a good year on the whole, professionally as well as personally. So I'm quite excited. And, next few hours, and I'm off to the races.
Oh, yes, that is something that you're spreading in the studio as well, the happy vibe. So we'll take that forward, right? And we'll keep speaking to a lot of companies and guests on the show as well. For now, we'll get Vishal Malkan for a technical check on the markets and discuss his trading bets as well. Vishal, good morning. Thank you so much for joining us. Well, at the day's low, mid-cap index too has come off from the highs. Do we see more pressure from here? What are the charts suggesting?
Good morning. I think as long as we are sustaining above the 18,200 mark, we are good, and we are sustaining that level since many days. So we are off to close this year on a good note, and I think the rally should continue in the new year. As well as same thing for Bank Nifty, which is 42,500 was the all-time high, which is sustaining and it's staying there. So I think both the Nifty and Bank Nifty are in a strong consolidation zone above the breakout level and looking good for the next couple of months.
Okay, all right. Hi, Vishal. Morning. What about stocks? What are you looking at?
So a couple of stocks which are on my radar right now. One of them is Apollo Tyres, which is given an all-time high breakout and sustaining about that 310 level since last couple of weeks, which shows good momentum on daily and weekly and monthly charts. So I think it's a good pick for the December as well as January expiry and looking at targets of 350 plus. And the second would be BHEL, which is again sustaining about those levels of 82 and looking at targets of 92 to 95 in the next couple of weeks.
Okay, all right, Vishal, thank you so much for joining us. Those are some technical picks and technical outlook as well. By the way, DFM Foods, that stock should be on your radar. It's down 3%, a sharp fall from the top. Advent has basically rejected the delisting price of DFM Foods. Remember, they hold 73.7%, basically the promoters. And now they've gone ahead and rejected that delisting offer or delisting price, basically. That is not something that they concur with. And that's the reason the stock has seen a sharp fall, down around 1.5% right now.
Sonal, just I think the discovered price was around 525 rupees odd. And I think the delisting price that they had come up with was in that range of around 265, I think so. So, because of the discovered price was much higher than what price they had initially come out with, well, the stock, as Sonal mentioned, it's corrected close to around 4% from the high point of the day as we speak. But it's a good time now to move forward and focus on a special segment where we get you a few ideas for profit from Money Control Pro. Madhu Chandade of moneycontrol.com joins us to talk about a stock that she's tracking rather closely. Madhu, over to you.
Kotak Mahindra Bank is making the most of the positive operating environment in India with robust growth in credit in recent quarters and a record high interest margin thanks to a decent share of floating rate book in its overall loan book. Asset quality continues to remain pristine with negligible restructured portfolio. While in line with the trend in the industry, deposit growth lagged credit growth, we feel Kotak Bank's deposit franchise is better placed to weather the interest rate upcycle, and recent revision in deposit rates should aid deposit mop-up. In recent times, due to capital market volatility, the capital market-linked subsidiaries had a weak show. However, Kotak Bank has an enviable array of offerings in the financial services space and none listed at this point in time, and therefore provides future upside. Albeit the concerns on senior management transition from 2024, we see Kotak Bank as a long-term winner and advise investment on any weakness.
Okay, all right. That is an idea for profit from Money Control Pro. Madhu, thanks a lot for joining us. With that, we'll slip into a short break. Shyam Metallics is in focus. The stock is buzzing after the company makes a new acquisition, adding to its stainless steel capacity. The management will join us after this short break. Stay tuned.
Welcome back. Well, as promised, let's get chatting with the management of Shyam Metallics. Well, they've gone ahead and done some inorganic growth, which is good news, and the street has read it positively. They basically announced that they have acquired Motocorp, resulting in additional stainless steel capacity of around 1.5 lakh tons per annum. But to understand more about that, well, we're currently joined by Mr. Brij Bhushan Agarwal, the Vice Chairman as well as the Managing Director of the company. Hi, Mr. Agarwal. Congratulations on closing out another acquisition. The street has read it positively for now. But give us a couple of details. One, is this plant currently functioning, at that rated capacity? Two, do you need to spend some money out there? And what is the total cost of acquisition? Go ahead.
Yeah, thank you. This plant is functioning now, but the capacity utilization presently is very low. And once we take up the complete control of the plant, because it is under the acquisition process, will be running from next year at full 100% capacity.
Okay.
And where your point number two, like about the acquisition cost, overall, we have to do some little bit of modifications and upgradations, which will not take much time. The total acquisition value will be around 450 crores.
450 crore rupees is the total acquisition cost. It's a small unit, but is there any more scope to expand it? What is the kind of addition you'll see to top line because of this acquisition? And this 450 crore rupees, how will you be funding it? You spoke internal accruals, but otherwise the capex that you've announced of 10,000 crore rupees, that's a big number. What is the guidance that you can give in terms of where you will put it and what kind of debt will you have to take because of this?
This 450 crores is 100% from the internal accruals, and there is no debt financing in this. And next year onwards, we expect a revenue of somewhere around 2,000 crores from this plant. And down the line, in next 2 to 3 years, we will be doubling the capacity in the stainless steel. And we expect that in next 3 to 4 years, to be more prudent, we should be able to generate a revenue of around 4,000 to 5,000 crores from the stainless steel business.
Oh, okay. All right. So 2,000 crores and it's going to 4,000 crores odd by 2025 odd. A couple of questions, Mr. Agarwal. The plant is currently not functioning, right? To get it up and
no, it is functioning.
It's functioning, but it's not at full, at optimum levels. So as you said, the next year you'll be looking at it going to optimal levels. Do you have to spend some more money, or that's all taken into account in the 450 crores?
That has all been taken account in the 450.
And the capacity is 1.5 lakh tons. When you're saying it's doubling, you'll be taking it to around 3 lakh tons.
Yeah, approximately 3 lakh tons. Yeah.
Okay, all right. So that's about this unit. But just to move on, then, you're talking about 10,000 crores of capex. I wanted some clarity. Around 4,000 crores you already announced. So that 4,000 crores is part of this 10,000 crores, right?
Very correct.
So the remainder is around 6,000 crores. Out of that, I'll pull out another 450 crores odd, which you're going to be spending for this unit. So around 5,500 to 6,000 crores is remaining. What all do you want to spend on? What's in the pipeline, or is there some other inorganic growth that you're looking at?
See, by end of next year, like we have stated that 4,000 crores capex has already been declared. We should be over by end of next year, 24. And we have acquired another plant, Ramsarup Industrial Corporation, where in next quarter we'll be declaring the capex for the same. for the modification and upgradation of that plant. In addition to that, since we will be over with the present capex in next 1 year time, we will be increasing the capacity in our existing business of long product, as we are seeing that there is a good penetration demand
Okay.
happening. So majorly, I would say more than 40-50% of the new capex will be spent in the brownfield in the existing plant in our same organic business where we want to grow.
Okay. So you've outlined where all you will be putting that money. But since it's a big amount, I would like to know, will you be taking more debt for this? How are you going to be funding this acquisition or the capex that you've spoken about?
We have enough cash in our business.
Okay, all right. So it looks like there's a technical glitch there, but the stock is doing really well and good commentary coming in from Shriram Metallics as well. Now, okay, you're back. Mr. Agrawal, please go ahead.
See, the capex what we have declared for additional 6,000 crores is not going to come in next 1 or 2 years. We have said around 4 to 5 years.
Okay.
And since we are done with our existing capex, what we have declared in the past, so all these things is going to come through the internal accruals, and we have around we have to dilute another 13%, 12.5-13% stake for the SEBI guidelines. So we will be getting a lot of cash in our system from that as well. So this is a combination of the internal accruals plus the dilution of our
You'll be getting some cash. So are you going to do a fresh issue? Will the promoter entity get the cash or will the company get the cash? Because if you're going to bring that 88% down to around 75%, then you will be getting that money. But if you're going to be doing a fresh issue, then the company gets the money.
It is not yet been completely decided, but it is going to be a combination of OFS and QIP.
QIP. Oh, okay.
Interesting. So we'll touch base with you once that is decided as well. Now let's talk about business in general. Mr. Agrawal, can you give us a sense of how demand is on ground and what has been the change in pricing if we talk about your main product? Have you seen some recovery? If yes, by how much? And if you can compare it with the Q2 pricing that we saw, because that was the weak quarter.
See, market is now turning better, I would say, after the, the change in the import-export duty withdrawal by the government. The market is looking positive, and down the line also, the long product penetration, the demand is on the better side. The margins are also increasing because the coal prices are also, cooling. So we are seeing that in the time to come, the business is going to be pretty decent.
Okay. Then we'll ask you for two numbers. One, export market, if it's reviving, what does export go as a percentage of your total mix? As of the last quarter that we have, it was around 9%. And second up, if you could tell us, as of the second quarter, you did less than 5,500 EBITDA per ton. So will that number recover in Q3 or will it recover in Q4?
See, the export market is not yet picked up, I would say, because of the, it's a festive session and the international market, there is a lot of inflation. I would not say that export has really is a game changer at present, but in the time to come, I believe from next year onwards, the export market has to pick up because of the energy crisis, and inflation. There's a lot of change in the export demand. And when we are talking from the EBITDA margin point of view, I can say about the overall, the year-wise, this year our revenue is going to be around 35-40% over the last year revenue earning.
Okay.
And in all the quantity also, lot of growth is there in the long product, B2C space 1 year before.
Yes, Mr. Agrawal, we do realize, yes, there will be a recovery. We just wanted to get a sense of EBITDA per ton, also because you had guided for 11,500 to 12,000 rupees per ton, right? Since in Q2, it's less than 5,500 rupees per ton, what are you guiding for the rest of the year? Will you be able to meet this guidance?
The average should be around, the average of the year should be around 8,000 to 9,000 rupees a ton.
Okay, so it'll be lower than what you were tracking earlier because of the way things have been in Q2. And as Nigel asked you, exports, you are saying it'll see a revival. It was around 9% in Q2. In this year itself, will you see it going higher because of the removal of export duties?
Not really. I don't see a very great change. We have to wait for the next year. Yeah.
Okay, so pricing still is a bit of an issue, and it's more lucrative maybe to go ahead and sell your production in the domestic market rather than the export market. So we don't expect any kind of revival on that front. Well, it's been good speaking to you, Mr. Agarwal. Thanks so much for stopping by and giving us those details. Wishing you all the best for the end of this year as well as for the next year. And we'll wait by for that dilution, the QIP as well as the OFX mix as well. Well, for the time being, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action. Welcome back. You're tuned into Chartbusters. You're on CNBC-TV18. Well, I think we need to focus on DFM Foods, and that's rather important because there's a counter offer that's come in at a price of 467 rupees per share for around the 26% odd. So yes, they rejected the earlier proposal, but this is rather important because the counter offer that's come, it's much higher than what the current price is. And that's why after an initial downtick, we're seeing a bit of a recovery. So the intent is still to delist. They've rejected the discovered price of around 525 odd, but shareholders will take into account that the counter offer, well, it's been revised nearly around 200 rupees higher than what they initially offered. Initially, the offer was around 264 odd, but now the counter offer that's come in is coming at around 467. So I think that's the reason why the stock has seen such a big recovery after seeing a slam dunk initially. Currently, in fact, has recovered a goodish bit from the day's low. It
was down around 4%. Yes. So, of course, this important clarification, and that's the reason the stock is seeing a recovery. That's about DFM Foods. Let's move on and talk about an exclusive now. Sources are telling CNBC-TV18 that e-auctions for the resolution of Reliance Capital will get underway today. Ritu is joining us to tell us more. Hey, Ritu, good morning.
Good morning, Sonal. That's right. The e-auction process for the sale of Reliance Capital under IBC starts at 11:30 a.m. today. We understand that the base bid has been set at 6,500 crore rupees under the challenger mechanism. Now, remember, we reported earlier there are 4 suitors that are in the fray. That includes a consortium of Cosmea Financial Holdings and Piramal Enterprises, which had made the highest offer at 5,231 crore rupees. And the other 3 bidders in the fray include, Torrent Capital, Torrent Investments, Oak Tree Capital, as well as Hinduja Global, who had made offers of around 4 to 4,000 crore rupees in total. However, we've been given to understand that Cosmea Financial Holdings has already written to the Committee of Creditors, indicating, given that this base bid is higher than its offer, it may not be commercially viable for it to participate in the process, and therefore it may not be part of the e-auction that takes place today. However, the other partner in the consortium, which is Piramal Enterprises, has not yet separately reached out to the lender, so it is unclear whether or not they will take part in the auction process and what kind of offers come in from the other 3 suitors as well. As far as the bidding process is concerned, like I said, it will be done under a challenger process. The floor price will be 6,500 crore rupees as opposed to financial creditors' claims, which are well over 30,000 crore rupees. And each subsequent round will see increase in the incremental bid by 1,000 crores in the round 2 and 3 and 500 crores and 250 crores in subsequent rounds. At the end of it, the highest bidder will be declared the winner. So, this process is going to start soon. We'll have to see what kind of interest comes in for Reliance Capital.
All right, Ritu, thank you so much for joining us and taking us through all those important details. The market's still at the day's low and is the mid-cap index, which is outperforming today in trade. And with that, we'll wrap on this edition of Chartbusters. And as we do that, let's hear out some market opinion coming in from Sanjeev Prasad of Kotak Institutional Equities. And stay tuned for more updates.
Market hasn't done much in 2022 also. So last 15 months, if you take, let's say, from September end of 2021, it's been pretty much in that 18,000 plus minus range only, barring a bigger correction in May and June. People are obviously very worried about high inflation and high interest rates and so on and so forth. So market is, as of now, in a consolidation phase. Valuations are rich. And the second thing which we have to figure out is, how long do the central banks, including the RBI, hold interest rates? So as of now, we're getting some comfort on the fact that inflation seems to have peaked in some countries, peaking in others. So hopefully, as far as the actual central banks are concerned, we are probably reaching terminal or peak rates as far as the current monetary cycle is concerned.